Now, in this lesson, we are continuing with our discussions of financial documents. And in our discussion of financial documents, we also have the things like tariff, income, cost, and selling price. That is also the break-even analysis. Now, in one previous lesson, we had this discussion, and the section that we started with was section 1. And we were very specific, and we limited our discussion into financial documents. Now, in this lesson, we would like to extend our discussion of financial documents and tariff systems to include section 2. Section 2 is about budgets and statements of income and expenditure. Okay, budgets and statements of income and expenditure. Now, how are we going to handle this? Well, let's just have a quick overview of what we are going to be handling in this section. Now, the section of statements of income and expenditure, also budgets, is one of the materials that we have to cover as of the CAPS requirement. And as it is indicated, by the end, you will be able to work with numbers, that is you as the learners. Through the end of our discussion, you will be able to work with income and expenditure statements, showing a comparison of income and expenditures for 2 time periods. You know, we normally carry on expenses. I mean, we normally spend money. We spend money as individuals. We also spend money as what? As a family. We also spend money as a business entity. Sometimes we spend money as a company. And so spending money gives us what we call expenditure. And then earning money because of some type of thing that we do, some type of activity that we do, which could be employment. It could be a business. Anything that we do that can bring money in leads us into what we call income. And from it, we get what we call statements of income. Well, now, the next thing that we will want to look at as we are talking about income and expenditure is what we call budget. Now, the context of this item that we are talking about, that is the scope of income and expenditure statements and budgets relate majorly to businesses and workplace contexts. So now precisely, what do we then mean when we are talking about budgets? Like for example, when someone is saying, I have made a budget, when the business is saying, we have designed a budget for this term, or we have designed a budget for this period of time, for this month, or for this week, or for today, or our budget for today is this. What does this then mean? Well, a budget shows predicted income and expenditure items for an event. Okay, that is the predicted amount of money which is supposed to be generated, and also the predicted amount of money which is supposed to get out of the business. That is, now when we talk of income, predicted income and predicted expenditures. That is like to say, obviously, we are going to spend some money if we have to do this business, but we have to make a prediction. We have to foresee. We have to make a calculation of how much we are going to get from this business. For example, over this period of a week, we also need to find out how much we are going to spend over this period of a week or maybe a month. That gives us what we call a budget. So a budget shows predicted income and expenditure items for an event, business or organization. The budget describes what the business or organization or organizers of an event predict, and the income and the expenditure for the business, organization, or the company in the future. Now, budgets are very important tools, mainly for planning the future finances of an event. We make budgets when we want to plan for the future expenses, when we want to plan for the future incomes. This makes budgets very important. The next thing we want to look at as we are moving on in this element of budget is that the budget that an individual makes is a little bit, it may not be the same as the budget that a company makes, but budgets of most entities will include income and costs. That is income and expenditures. Now, when we talk about statements of income and expenditures as the second thing we want to talk about here, okay, that is now that we are done with this concept of budgets. Okay, the concept of budget, we now want to look at this concept of statement of what? Income and expenditures. Statement. Expenditures. Yes. Because now that we have seen that in budgets, we foresee, we make a plan for future period of time over the income we are going to get as a company and the expenditures we will have to do what? We have to go through. The expenditures we are going to spend money on and the income we are going to get. Then now the next thing we want to look at is called what? Is called statement of income and expenditures. Well, how do we get to this? Now, a statement of income and expenditure shows a summary of the actual income and expenditure items for an event. Okay, so when we talk about statements of income and expenditure, this is very much a summary of the actual income. Possibly after making a budget, the time has come. Now you have to spend the money and you also have to get some money as income. Now, each time you spend some money, we consider that expenditure. Each time you get money, possibly because of you have sold a product or because you have sold a service, that is called an income. Now, this summary of the actual income and expenditure is what we now call the statement of income and expenditure. Now, because you have made a budget, you predicted what your income and your expenditure is going to be. And now that time has come and you have, you have spent money as expenditures and you have also got some money as what? As income. You can now make comparison to see what has generally happened. For example, has the business made loss? Have you made profit? Where are you? Or possibly the profit was simply, rather the cost was simply equal to the income. That kind of decision that comes from the summary of the statements of income and expenditure is very important because then we get the direction of the business. If we have made a loss, then we then need to see how to cut costs in the future, if it is possible to do that, or how to increase production so that we can do what? Excuse me, so that we can sell more. Yes. So the statement of income and expenditure will help provide a summary of what has actually happened. Okay. Now, this discussion of budgets and statement of income and expenditure will lead us through to an activity. So here is one activity. Okay, here is one activity that it's about a family stuff. So I'm going to read through the whole question. So the Courier's family or the Courier family has created the following budget for their household expenses. Study the budget and answer the questions that follow. Okay? Now, all amounts are given in rand. Now, the thing we are talking about here is this. Whether it is one person, whether it is a household, a family, or whether it is, well, whether it's a big company, when it comes to budgeting, when it comes to statements of income and expenditures, we are simply talking about cost and expenditures. That is income and expenditures. So even in the family, you want to divide the total amount of money into the income, the money which comes into the family, and then the expenditures, the money which has got to be paid out to facilitate the livelihood of the family members. And then now this way we can do what? This way we can go ahead to expand our discussion into, we can then expand our discussion into what? Into this activity. Well, here we have Courier's net salary in March. The actual amount was 21,000 rand. Then the budgeted amount was 21,000, but what was actually paid was 19,000. Now, Courier's net salary for March, okay, that is okay, sorry. This is Mr. Courier's salary, the husband. Then now here is Mrs. Courier's salary, the what? The wife. So the wife actually got 20,800 in March. The budgeted salary was 20,800. Then the actual salary was 20,800. So basically, the wife got everything the way it was in the month of March. The freelance income. This is very much like the type of income which comes like because of a quick job that you did, you know, like a small quick job, like 1 hour here, 2 hours there, 30 minutes here, 30 minutes there. This type of job can also bring in some money. Well, the total amount of money in March due to the freelance income was 3,200. And then the budgeted one was 1,800. Well, actually, nothing was received as what? Freelance income. Now from here, we get the total income to be 45,000 for March, then 43,600 budgeted one, okay? And this time we get actually 39,800. Now for expenses, there was rent. Now rent costed 9,834.2. That was the rent for March. Then the rent that was budgeted in April was 9,834.2. Actually, the rent stayed the same. Nothing got changed. Now for water, electricity and rates. In March, it was 3,218.45. Now, the budgeted one in April was 3,200. Well, water, electricity, and rates actually was much higher than the budgeted one. It was 3,684.5. Then now we extend our discussion into medical insurance. Medical insurance in March was 3,120. But the budgeted one was also 3,120. It did not change, actually. Then now, DSTV in March was 899. DSTV that was budgeted for April was 899, but the charge was increased to 949. This is the actual money that was spent on DSTV. We then have school fees. School fees was 6,950 in March. Then the predicted school fees for the month of April was 6,950. School fees was not changed. Now also cell phone was 850 in March. Cell phone was predicted or was budgeted to be 850 in April. It did not change. It stayed the same. 850 was spent for cell phones. Then now we have what? Internet. Internet in March costed 499. Internet, the budgeted one was 499 also. Internet charge did not change. Well, then we extend our discussion to include what? To include car insurance. Well, car insurance in March was 1,200. The budgeted amount was also 1,200 in April. It did not change. 1,200 was spent in April for what? For car insurance. The next thing is swimming lessons. Swimming lesson in March costed 1,300 rands. Then the budgeted one was 1,300. It did not change. 1,300 was spent by the end of April for what? For swimming lessons. The next fee was bank fees. Bank fees was 299 in March. Bank fees did not change. It was budgeted and it stayed the same. We then move on to credit card repayment. Credit card repayment in March costed 1,800. Then it was budgeted that it would stay the same. It actually increased to 1,950. Then now petrol, that is petrol was 3,000 in March. Budgeted was 3,000. It increased to 3,280. Then grocery was 2,800 in March. Grocery was budgeted to stay the same, but grocery increased to 2,890. Then now savings, excuse me, saving was 800 rand in March. Saving was expected to increase, that is, was budgeted to increase to 1,000. Instead, saving decreased to 450. Then entertainment in March was 2,000. Entertainment was budgeted to stay the same, but it decreased to 1,950. Car repairs. Car was not repaired in March. It wasn't expected to be repaired, but this time it had to be repaired at a cost of 3,200 rand. Now the total in March became 38,569.65. Okay. Now here we have surplus or deficit. Then now budgeted was 38,751.20. Then also here we have the actual amount of money. Okay, was what? The actual amount of money spent or as expenditure is 42,401. 42,401.7. Okay, giving us a deficit of what? Negative 2,601. Well, this is the information we have been given about what? About the Korea family. And now we are supposed to use this information to answer these questions. The first question is, list 4 variable expenses in the month of March, including their amounts. Well, what are these variable expenses? Now, it turns out that variable expenses are these expenses that are not fixed. You know, they change from one time to the other time, from one amount to the other amount. So you would easily see how it has changed. Based on what? Remember, they're talking about expenses, so we will not go into income. We will be here in expenses. So variable expenses, okay, that is question 1 under this activity. Variable expenses includes what? Okay, let's have it as variable expenses. So variable expense 1, well, let's see what are some of the things that never stayed the same. Okay, what are some of these things that never stayed the same? Well, when we check through, we see that rent did not change, but water, electricity, and rates changed. From March, it was 3,218. Then, by the end of April, it was 3,684. So we include what? We include water, okay? We include electricity. We include rates. Well, what is the new amount? Well, the new amount is 3,600, rather, initially it was 3,218. Point what? 0.45. That is what the initial amount was. So, well, then it increased to a new amount. What we are supposed to do is just to list any 4 variable expenses in the month of March. Okay, variable expenses in the month of March. So we are going to consider the cost of March instead. The next thing is, well, we could go ahead and look at what? The other items. Now, notice that we also have what? We also have things like DSTV, okay? We have things like DSTV, which changed. DSTV, well, here was expected, but here it changed. What else? Things like, well, let's go through and check. Even petrol. Petrol also changed from 3,000 to what? 3,200. You know, there are a lot of these other items. You know, we can include them down because we are supposed to put them. So petrol changed. So we consider that what? We consider that a variable expense. Expense which can vary. You know, for example, so the petrol costed what? 3,000. What is the next cost that we would like to look at? Well, there are so many other. You could even look at what? At grocery, for example. Grocery costed 2,800, then it got increased to 2,890. Well, maybe the taste wanted to change. You wanted to have a better taste. The family wanted to have a better taste. And so groceries is one of the things that did not remain constant. So the amount initially was, well, 2,000 and what? 800. What is the next item we want to consider in this discussion? Well, even saving. Now, notice that saving was 800 in March, but saving that was expected to increase to 1,000 actually decreased to 450. So we cannot ignore that. We just have to put it right away. So there we go. We say saving is one of the what? Is the one of the variable expenses. And so saving is 800 rand. Wait, that is question 1. We then want to look at question 2. What is question 2 talking about? Question 2 is talking about fixed expenses, okay? Well, we then want to list fixed expenses. What are these fixed expenses? Well, the fixed expenses, these are the expenses. These are the things that money was spent on, but it did not change from the month of March to the month of April. So we want to look through and see what are some of these expenses that did not change. Well, starting with the first one, which is rent, you notice that rent in March and rent budgeted, also rent actual did not change. So we would like to include rent as one of the what? As one of the costs that, or as one of the expenses that did not change. And so the cost was 9,800 what? 34. Well, 0.20. Yes, that is what we have for rent. But is that all? No, that isn't all. We can still go ahead and do what? And look for some more. Well, what would be the next? Well, let's check through and see. Electricity, we are done with it. It's a what? It's a variable expense. Then we now look at medical insurance. Looking at medical insurance, you notice that the money or expense on medical insurance in March stayed the same as the one budgeted, even that one that was actual. Okay, and so then we say medical, okay, medical insurance did not change. Medical insurance remain the same, and so it's going to be considered a fixed expense. And so because of that, we say medical insurance, which cost what, by the way? Medical insurance costs 3,120. So there we go, 3,120. Well, we could go through and see some more items, okay, that actually did not change. That is fixed expenses. Well, going through, we could go through and see there are a lot more items that we can check from here. For example, school fees. School fees was expected, rather, school fees was paid in March as 6,950. It was expected to stay the same. That is, it was budgeted to stay the same. It actually stayed the same. And so school fees become one of the fixed what? Fixed expenses. So we include it right away. School what? School fees. So we say school fees as one of the fixed costs is 6,950. Well, now that we are done with school fees, is there one or two more items we could consider including there? Well, we could consider including one or two more items. Let's check. Well, you notice that things like car insurance also did not change. Yes, car insurance did not change. Apart from car insurance, we also have what? We also have things like, well, let's check. Car insurance, also bank fees, you know, it also did not change. So we would like to include their car insurance. Car insurance did not change. And it stayed at what? At 1,200. And also what? Bank fees. Well, we include bank fees or bank charges. So bank fees, checking through here, bank fees stay 299 throughout the period. And so we say bank fees is one of the what? Is one of the fixed costs. Now the next thing we want to look at is question 3. So in question 3, we are supposed to determine what? We are supposed to determine occasional expense. That is, what occasional expense? Here is the question, question 3. What occasional expense did they have in this period? Very much like, what is this type of expense that was not budgeted for? These are the type of expenses that we call occasional expenses. And what is it in this case? Well, excuse me, you notice that the expense that was not catered for, that was not budgeted for, that never appeared in March, even it wasn't foreseen, was this expense which you are calling car repairs. So we say occasional expense, okay? Occasional expense for this period is, well, what is it? Car repairs. Yes, this is the what? This is the occasional expense. Now we go ahead to look for what? To look for the solution to the second question. That is rather the first question. Now notice that this occasional expense, which we are having here, costed, okay, this occasional expense, which is car repairs, 3,000 and what? 200. The next thing we want to look at is what? Question 4. Well, what is question 4 asking us to do? Well, question 4 is that, is each of the income fixed or variable? Okay, is each of the income fixed or variable? Well, we then want to look at these incomes. The income we have here is net salary and freelance income. So we would like to break it into two. Okay, we are now describing income. So how are we going to describe income? Well, we have the income divided into net salaries and freelance income. So we therefore say net salaries normally don't change. And so net salary is now considered fixed. Even if there was a slight, there was a slight decrease here, we would like to think that this slight decrease in net salary for Mr. Courier was probably because he possibly did not go for work when his car broke down. And because he did not go for work, he worked for less number of days. And since he worked for less number of days, he was also paid less. But net salary normally doesn't change. They stay the same if you work the required period of time. Okay, so we would like to consider net salary a what? Net salary a fixed income. Okay, that was the question. Net salary is going to be considered a fixed income. Okay, that is fixed income. Now, the next thing that we would like to consider here is freelance income. How would we describe freelance income? Well, freelance income in this context is going to be considered a variable income, okay? We would like to consider freelance income a variable income. What is this supposed to mean? Well, this is supposed to mean freelance income would depend on the amount of hours you have worked. If today you feel better, you can go and work for 3 hours. Tomorrow you even feel better, you can go ahead and work for what? 5 hours. But now, should it happen that you have not worked for enough time, you will be paid less. Freelance, it's normally hourly payment. So we go ahead to move to question 5. Well, what is question 5 then saying? Question 5 is saying, without doing the calculations, explain how the surplus or deficit was calculated in each month. Very much like saying, how do we calculate surplus? How do we calculate deficit? Well, now, surplus, which is in question 5 here, that we are supposed to explain how they are calculated, surplus or deficit. Well, now notice that normally when we are budgeting, we have income and we have expenditures. Now, should it happen that income is more than expenditures, then when we subtract expenditures from income, we are going to remain with some money because income is more than expenditure. So this extra money remaining is what we call surplus. Now for deficit, deficit is calculated the same way. The only difference here is that should it happen that income is less than expenditures, then when we subtract expenditures from income, what we are going to get is going to be a negative value, meaning this time we have used more money than the money we have generated, and that is called deficit. Okay, that is without calculation. So we say without calculation, surplus, or what we call deficit, is calculated. Well, we are not really supposed to calculate, but in words, we would have income minus what? Minus expenditures. So that is going to be all for this question. We are not supposed to put any figure there. We are not supposed to calculate anything. Well, the next question is question 6. What is question 6 all about? Well, question 6 is asking that what does supply mean in the context of finance? What does surplus mean in the context of finance? Well, in the context of finance, surplus means a positive balance, okay, or a leftover. That is called surplus. We call it positive balance or leftover. Positive balance, also known as left. You see, because we saw that income minus expenditure can give us surplus, then surplus will then become a positive value, which we also call positive balance, or sometimes known as leftovers. Well, now the next question is question 7. And what is question 7? Well, question 7 is saying, what is another word for surplus in the context of finance? Well, another word for surplus in the context of finance is simply profit. Yes, in the context of finance, surplus means profit. Just that. Why? Because you have taken away all the expenditures from the income you generated, but still you are left with some money. How would you like to call that money? You obviously want to call it profit. We then move to question 8. What does deficit mean in the context of finance? Well, in the context of finance, deficit means a negative balance, okay? A negative balance. So we say deficit means negative balance. We write it as deficit equal to negative what? Negative balance. Negative balance, or not enough money. That is what we were supposed to have written for. This was for surplus equal to that. Yes. Now, that is what we mean by deficit. Deficit then means you will have to use the money that you had saved to take care of what? Of the current expenses, because then you don't have enough money, you're in negative balance. Expenditures have become more than income, and so you have negative balance, and that is what we call deficit in the context of finance. And now question 9, well, question 9 is asking us for another word for deficit in the context of finance. Well, in the context of finance, deficit can also be used to mean, well, deficit can also be used to mean loss. Just that in the context of finance. because then you have less than the money you generated. For example, in employment, you have a job, you're doing something, you have an activity to do, but the money you have at hand is now less than the money you have spent. In other words, you had to borrow some money to cover the expenses. In that case, you are in loss. We then go ahead to discuss question 10. That is, explain how the family came up with the predicted values for this month of April. How did the family reach these predicted values? Well, the family possibly looked back at the month of March, okay? The family looked at the month of March, to guide them through the prediction for the month of April. Just that, okay? So we say they used the what? The expenditure and income of March to do what? To guide them through the budget. Okay. To guide them in the budget for April. That is what normally happens. You really have to look back and see how much was the expenses of last month. That is, how much was the expenditure for last month? How much was the income for last month? That means expenditure and income for this month is going to be closely related to the expenditure for last month. That then means you can go ahead to make prediction. You can go ahead to do what? To make budgeting for this current month. We then want to discuss question 11, okay? Now, question 11 is that what might be a better way to predict expenses? What would be a better way to predict expenses? Now, to avoid yourself getting into so much crisis, the best way to predict expenses is to budget more for expenses, okay? That is the best way to predict, or the best way to predict expenses. You really don't want to get into crisis. You don't want to have problems with loss. So you have to budget slightly more than your what? Previous expenses, okay? So the thing here is you should budget slightly, okay? Not too much, but at least slightly more than the previous what? The previous expenses or expenditure. Yes, you should budget slightly more than the previous expenditure. That way, you are much safer. Okay. Now, the next thing we want to look at is question what? Question 12. Well, now, question 12 is asking that by how much was the actual expenses, rather the actual expense amount, different to their predicted expense amount? Well, notice that we have this as the actual expenses. This is the predicted one. So the question is by how much, okay, was there the difference? So the difference in expenses, okay, will now be, well, the differences in expenses is going to be the actual expense minus the predicted one, okay? Which is what? Which is 42,401 point what? 401.70 minus what? Minus 38,000 and what? And 751.20. So this would give us the what? The difference in the predicted and the actual expense. So with our calculator, we can then go ahead and say, well, 42,401.70 minus 38,751.20 would give us a value of 3,650. Okay, it would be 3,650. 50 point what? Well, it will be 50.5. So yes, this would be the difference, and just that. Now, the next thing we want to look at is question 13. Now, question 13 is asking that we suggest a reason for this type of expense. I mean, we suggest a reason why there was a difference between the budgeted expense and the actual expense. What would be the reason for this? Well, the reason for this could be some unforeseen reasons. For example, like what? This car that broke down. Now, notice that there was this car repair that was not budgeted for. And because this car repair was not budgeted for, this is a possible cause. Also, we could think of what? The lower income, okay? There was this thing of the lower income. The lower income came in possibly because Job or Mr. Courier did not work all the days, and so he was paid less. This is a possible cause. Well, explain why this difference is significant. Well, what would we say? Why is this difference significant? Because it's significant because it then cost a lot. You know, when you look at what has happened, okay, when you look at what has happened, the things like car repairs broke down, there has been increase, there has been these things of low pay, okay? So it is significant because of the factor that these costs were incurred, okay? Costs were incurred. Basically, costs became more than income. Costs like what? Costs like car repairs that never appeared in the plan. And because of that, not all days were attended to. Car had to be repaired. And while the car was being repaired, days also went by without what? Without being attended to. So now the next question is, suggest a reason for the change in courier's salary in the month of April. Why was there? Well, this is a lot related. He missed job. He did not attend all days, okay? He missed some days at work, okay? He missed some days at work. Well, that could be a possible reason. Then the next question is question 16. Suggest, well, that was already question 16. Suggest a reason for the change in courier salary in April. That is what we talked about. Then question 17, name one expense that increased from March to April. Okay, name one that increased from March to April and calculate this as a percentage increase from March to April. Well, the first expense that increased, let's check through. We have already calculated this. We really don't need to go through that again. The first expense was what? Well, it was water, electricity, and petrol at 3,218. So we would like to look at that right away. So we then go ahead and say, well, we have already discussed question 16. We just want to go and look at question 17. And what is that? Well, the question here is that we do what? That we look at one expense that has increased. And what is that? Well, that is water, electricity, and rents. We write it down as water, electricity, and rates. We're supposed to calculate it. So what is this then supposed to be? Well, when we look at how it changed, it increased to 3,684, okay? It increased to 3,684. Point what? Well, 0.50. Now, notice that from it, we are going to subtract the original value, which is what? 3,200 and what? And 18 point what? 0.45. Now, we are supposed to calculate this as a what? As a percentage. Okay, so we have to divide this. Okay, this was 45. We have to divide this by the original amount, which is what? 3,218 point what? 0.45. Then we express it as a percentage, meaning we multiply it by 100. And when we do that, what we get is the money or the amount which is required of us. Well, our calculator will help us with this. 3,684, okay, 0.50 minus 3,218.45 gives us 466. Now, when we divide this by 3,218.45, what we get is 0.144. Okay, we then want to multiply this by what? By 100, so that we get 14.48. Yes, this is what we get as a percentage. It will be 14.8. 14.48, yeah, 14.48. Yes, this time in what? This time in percent. So yes, notice that this calculation or the calculations we have been carrying out on the concept of budget and statements of income and expenditure is very important. I will then leave you with one activity to do. But first, go through, and where needs be, you can watch this again so that you get the exact explanations the right way, right from start up to the end. Then when you are done with that, an activity will be coming really quick. That way, we at least have looked at section 2, which is budget, then income, that is rather budget, then statements of income and expenditures. Until next time, the next thing now is activities.